I've heard 1,000 times or maybe 1,000,000 times that the central banks or the governments will never allow something like Bitcoin to happen because they don't want to give up control over the money, which of course is a great argument. And there's a lot to that and we can unpack that. But I would somewhat agree with that. They don't want to give up control over the money. But if that's true, then does the Fed, Jay Powell, want to give up control over the dollar to the ECB? To the BOJ, to the Ruble. And so we have all these different factions that I see that are kind of fighting. And it looks like the Fed really wants the dollar to remain strong. And they're doing everything they can do to strengthen that, including continuing to raise rates, taking on the euro dollar market. It seems like trying to drain liquidity out of that, get a handle on that, so to speak. And Jay Powell's been very clear, very clear. He doesn't care about your retirement account. As a matter of fact, he wants it to come down. He doesn't care about the value of your home. He wants it to come down. And even worse than that, you making a good wage is a problem for them, and they want wages to come down as well. And so they don't care about the markets. A lot of people think they're going to pivot when there's enough pain. I don't see that being the case. He's reiterated over and over that they won't. I believe rates will stay longer than most people expect. He said that he's okay to take it too far and break things because they have the tools to rebuild things. And ultimately, I believe it comes down from this worldview of trying to protect the dollar above all other currencies and get control over that. The dollar's going to continue to trend down to zero. So it's not like they've saved it, it never goes down. And so I'm talking about over the next 12 to 36 months. Ultimately, sure, of course, they're going to have to wreck the dollar. We are in a debt-based monetary system, which is basically a fiat Ponzi scheme, right? And so if they don't continue to always inflate the currency, the whole system crashes. And so they're going to have to do that. We're already seeing this. So we saw massive numbers this week. The Fed is paying out more interest because they've raised rates than they're receiving in. And so they're technically insolvent. The problem is that now they're not giving money to the Treasury. So the government now is starving for money. At the same time, they're trying to pass this enormous omnibus bill, and they need more money. More deficit spending, but they're not receiving the money. And so we have these constraints, and I believe this is why the market is somewhat calling the Fed's bluff. And so, Jay Powell goes, hey, you didn't listen to me correctly. There's going to be pain. I don't know why you guys think this is bullish. This is going to be bad. But the markets are somewhat calling their bluff because of maybe what Rick Rule is seeing is we understand the natural constraints that the Fed and the governments are in. They are going to have to print money. I just think that they're going to continue to push the pain longer than most people. And then eventually, of course, sure, they're going to pivot. They're going to blow this thing sky high. Things are going to crash bigger, faster, deeper than they thought they would, a la March 2020. And I expect a sort of a V recovery. They'll blow this thing sky high. We saw 700 billion pledged in 2008 that ended up to about 1.5 trillion. We saw somewhere between 7 to 11 trillion in 2020. The next one's going to be 20 or 30 trillion. And the dollar will, of course, continue to decline in value. One thing that I've learned is that there's no such thing as the real estate market. There's thousands of markets broken down by size, type, price, etc. And so what we're seeing is, to the point that you've made, yes, in some locations like Seattle, San Francisco, we're already crashing worse than we did in 2008. So we're already worse. However, in some markets like Miami, it hasn't crashed at all. It's flat. Many markets in Florida are flat. Some of them are even still going up. And so how is it that some are worse than 2008 already, and then some are still flat, or some are still going up? And that's because, again, there's no such thing as the market. There's thousands of markets. And what we've really been seeing is two big mega trends in real estate. The first is the demographic shift, or really the baby boomers. They're retiring. They don't want to live in the cold. They don't want to live in the snow. They don't want to plow their driveway anymore. They don't need the big McMansion anymore. The kids are gone. They want to move somewhere where it's warm and they can play golf and tennis or pickleball now. It's the big sport, and they can play that all the time, right? And so they want to move to low tax states, and they're moving. So there's then that big shift. But then the pandemic brought another big shift, which was the work from home shift. But more importantly, it was I want to move to pro-business states that don't shut my business down, don't lock me inside. And so we've seen massive influx into states like Florida. And so that's why we're seeing that. They're leaving California, they're leaving the Bay Area, they're leaving Silicon Valley, etc. And they're moving to these areas. And so I think that will continue. The way that I look at the real estate market kind of moving forward is, if you were to put a little bit of water on a counter, it would kind of it would pool, and you'd have like little pockets of water. And I think that's what the real estate market will do. Some areas will continue to do really well. Some of them are going to do really, really poorly. Specifically, the areas that are going to do very poorly and are doing very poorly is we have to divide the market into new home construction and existing homes. Because new homes, we have, giant publicly traded corporations. They built all these homes, and they just need to get these things out. And they're marking them down. Even if they sell them at a loss, let's just get them off the books. But existing homes are different because people locked in probably some of the lowest rates we might ever see, 2%, 3%, 30-year fixed mortgages. And those people with those existing homes do not want to sell their house with a 3% mortgage to go buy a house with a 7% mortgage. And so they're not selling. So the inventory is very, very low in existing home sales. Now, some people might say, well, Mark, you don't understand. There's going to be massive job layoffs and whatever. Maybe. We'll see what happens. But I think you have to understand there's differences in markets. Look for supply and demand. Where are the areas that have massive demand? Where are people leaving? And then look at the difference between the new homes and the existing homes. We're very clear to say Bitcoin, not crypto. Not saying that Bitcoin isn't a cryptographically secured currency. It's not a cryptocurrency. It's just that when we talk about Bitcoin, we're talking about Bitcoin. And when we talk about crypto, we talk about crypto, but we don't interchange those two. One of my favorite analysts, Lynn Alden, said, to confuse Bitcoin and crypto means you understand neither. And so it's kind of like that. And so when I say that crypto as a category, I'm making the claim that it won't see another bull run as a category, but I believe it's massively bullish for Bitcoin. So I believe Bitcoin will go on to another bull run, and even a bigger bull run than it might have gone on before once we get rid of the crypto piece. About every 50 years, for the last 300 years, about every 50, there's a technological revolution. So we have lots of new technologies, but about every 50 years, there's a technological revolution. There's been 5. So we had the Industrial Revolution. We had steam engines and railways. We had electricity and steel. We had oil and automobiles. We had microprocessors, which brought us telecommunications, internet, etc. And now we're witnessing another technological revolution, and that is Bitcoin. And the revolution is decentralization. Now, what's interesting about technological revolutions is they change the course of humanity. Obviously, electricity did, automobiles did, telephones and internet did. They change the course of humanity, but they also drive financial markets. And most people just don't understand that piece.